Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're well. Okay, so anything said in this piece, usual caveat, anything said in this piece is an opinion only. It's not investment advice, not financial advice. Let's kick off. We're going to focus on a couple of things today. Number one, on where the markets were at on Friday and US markets specifically, and then we're going to go and turn onto the UK because the UK is in a pretty unstable position at the moment. So the US came out with their jobs report, unemployment report on Friday, and it was worse than expected, sending down all asset classes, sending down shares and sending down the indices. So the Dow closed down 630 points. You've got the Nasdaq was down 420 points, S&P down 104. You've got the US 10-year Treasury rose 0.6 points to 3.88. All of that is absolute disaster for financial markets because now the unemployment rate is so strong that gave impetus and gave further credence to the Fed and to increase interest rates again by 75 basis points. Now, I've been saying over and over again from the beginning of the year that interest rates in the US, which is the lead economy in the globe, will have interest rates by 3.5% to 4% by year end. And I was saying that back in January, February, March. Then I changed. I said, you know what? It's going to be 4.5% by the end of the year. And that's where we're going to be. We're going to be at about 4.5% by December 2022 and going to 7% in 2023. Sounds outrageous. Sounds extreme. But if you recall, at the beginning of the year, also 4.5% sounded extreme, when most people were talking about maybe 1% interest rates by the end of the year in the US. And I told them, absolutely no way, it's not going to happen. Anyhow, so the unemployment number came out, the unemployment rate came out much stronger than expected, and that sent all markets down. Interestingly enough, Applied Micro Devices, AMD, which is a semiconductor, came out with a terrible forecast and their shares absolutely plummeted. So you're going to have a lot of corporates now, a lot of earnings coming out, especially starting from this week, and they're going to keep a focus on them, an eye on them as to what are their real earnings in light of rising inflation. And that is going to impact on corporate earnings, and I expect corporate earnings to slide across the board. Looking at Twitter and Tesla, they also fell sharply because there's serious concern. Where is Elon Musk going to fund this 44 billion takeover of Twitter? How's it going to be financed? Now, Tesla fell significantly on Friday, down to $226 a share. I only just put out a notice last week that Tesla's going to fall to 200. Now, that's looking more likely than ever. It's going to fall below 200. Also looking at Apple and looking at Facebook, or Meta as they're called, and Netflix and Google, they're all looking very, very vulnerable, and there are more significant falls, more significant downturns in the market to come as a result of a very strong employment market and the Fed likely to raise interest rates significantly. I want to move over now to the UK. Wow, so Liz Truss really needs to do a U-turn, okay? They've got it completely wrong on this budget, how they're going to run the economy, and there's going to be a run on the pound. The pound's going to go all the way down to 1-on-1 to the US dollar, and there's going to be further weakness against other major currencies. And that's because there is a serious lack of confidence within the UK, how they're running and how they're managing the UK economy. What she needs to do is do a U-turn, cancel all impetus, all stimulus within the economy, redo the budget, and what you should be doing is pulling money out of the economy, not putting money into the economy, because that's going to fuel inflation. Remember, inflation in the UK last record was running at 9.9%, and realistically it's going to jump well to 13-14% with this new stimulus package in the short term. Now, what's going to happen is that Andrew Bailey will have more pressure on him to raise interest rates. I'm very disappointed, which is expected from Andrew Bailey, but very disappointed that they never did an interim interest rate increase in the UK to give confidence to global markets that the pound is strong and the UK economy is strong. So what he's going to have to do now in the next interest rate meeting is increase interest rates by at least 75 basis points, but he should be increasing them now by 100 basis points, which he hasn't done. So unfortunately, the UK bonds are going to continue being sold off, and the UK pound is going to continue falling until Liz Truss and Kwasi and Andrew Bailey and all those cronies wake up and realise they need to take draconian action to save the confidence within the UK economy and within financial markets that the UK is stable. Fitch downgraded the UK from stable to negative. That's terrible. That's a terrible downgrade. So that's a big, big, big factor. And now what Liz Truss needs to do is get up tomorrow and say, you know what, we're doing a U-turn. I got it wrong. I've only been a few weeks Prime Minister. Let's do a U-turn. Let's give confidence back to the market, and everything, I'm sure, will reflect in stability in the pound and in the UK gilts, which is the bonds. Okay, look at the US dollar. US dollar is just getting stronger and stronger, and will get stronger as more interest rates rise in the US for two reasons. Number one, you get higher interest rates in the US than anywhere else, and number two, it's a safe haven in times of crisis. Interestingly enough, gold is going to fall all the way down to around about 1650. 1675 is a big solid support. If it breaks down that, then it's going down to 1650. Bitcoin's going down to 15,000. I keep saying over and over again, it's going down to 15,000. The high-tech sector, the Nasdaq's going below 10,000, and the Dow's going down to 25,000 in the near term. Okay, so just make a note of that. The markets are going down. Those who go long, there was a rally this week on Monday and Tuesday. I said to you it was a bear rally. In other words, it was a jump within financial markets while the overall trend is down. We're in a bear market, and unfortunately, a lot of traders got sucked in, believed it was the end of the bear market, and now the markets have shunted, dropped dramatically, and all those people who went long and bought shares are now losing significant amount of money. Interestingly, the airline industry is looking to increase prices on airfares from January next year by around about 30%. So airline tickets are likely to rise by 30% because of jet fuel costs and because of shortage of pilots and shortage of baggage handlers, etc., etc., and also a cut. And a lot of the planes have been mothballed. They've got to take the planes out of their hangars, and they've got to refurbish all those planes and get them ready for flight. So the airline industry is going to see a 30% increase next year in the cost of tickets. Will that impact on travellers? I don't know, because there is full employment, and if there's a lot of money floating around, then people will spend that money. So in recap, you've got a strong dollar. You're going to have Bitcoin and cryptos going down. You're going to have the Dow, the S&P, and the Nasdaq further forwards. You're going to have a rising in interest rates. You're going to have a run on the pound if Liz Truss does not turn fast. Okay, and oil has also gone up, by the way, because OPEC has not only cut production, but they will continue cutting production to maintain the price of oil. So oil's gone up. All that will eventually feed into inflation. Inflation is here to stay. Don't be fooled. High interest rates at this stage is simply not enough to calm down inflation. This is Mayor Valensky with Driving Markets. Have a good day.